Canada, often seen as America's polite northern neighbor, but lately it has been making headlines for all the wrong reasons. From the resignation of a prime minister to an increasingly unaffordable housing market, Canada faces a growing list of economic challenges. Its relationship with its largest trading partner, the United States, is becoming more complicated, all while the country's economy struggles to maintain the health it once had a decade ago. Now, Canada remains a high-income, advanced economy, and it would take a major downturn for that to change. However, economists are watching closely because what happens in Canada may soon happen elsewhere. The country is among the first to face the consequences of unsustainable real estate speculation, resource dependency, an aging population, and productivity stagnation, issues many other developed economies are also grappling with. The Canadian housing crisis, one of Canada's most pressing economic issues, is its housing market. While other countries have dealt with affordability challenges, Canada's housing problems are uniquely severe, largely due to historically low interest rates, lenient mortgage policies, and a widespread perception of real estate as a guaranteed investment. After the 2008 financial crisis, Canada's housing market never experienced the same correction as the US. When interest rates were lower globally, Canada's real estate market, already relatively stable, soared. Over time, homeownership became both an investment vehicle and a necessity, fueling a market where property values skyrocketed, pricing many Canadians out of homeownership. For perspective, a dishwasher doubling in price every 5 years would be considered an economic failure. Yet the same pattern in the housing market has been welcomed because it inflates homeowners' wealth. With a majority of Canadians owning property, political will to enact meaningful change is weak. Nobody wants to be responsible for deflating the market. However, the numbers don't lie. Over the last 2 decades, home prices in Canada have surged by more than 300%, while median incomes have only grown by a little over 100%. This disparity is forcing more people to live with their parents or rely on family assistance to buy homes, exacerbating intergenerational wealth gaps and delaying financial independence for younger generations. Additionally, Canada's rental market has tightened significantly. Vacancy rates in major cities like Toronto and Vancouver remain critically low, driving rents to historic highs. For many, renting, once an alternative to home ownership, has become just as unaffordable, creating further economic strain. Canada's stagnating productivity. Despite cultural and economic similarities, Canadian workers are significantly less productive than their American counterparts. Even after adjusting for working hours, U.S. workers are 30% more productive. The reason? Investment, or lack thereof. The U.S. invests far more in capital, innovation, and industry, leading to better tools, more efficient businesses, and stronger economic growth. Canada, on the other hand, has seen its resource sector shrink from 26% to less than 12% of GDP over the last 40 years, while manufacturing has declined significantly. Instead of reinvesting in industry, much of Canada's capital has flowed into real estate, creating a cycle of economic stagnation. This also contributes to brain drain. With fewer opportunities and high living costs, many talented Canadians are choosing to move to the U.S. where they can earn more and spend less. Over the last decade, emigration has increased by 70%, highlighting the growing appeal of opportunities abroad. The lack of large-scale investment in research and development, R&D, further exacerbates this issue. While American firms benefit from robust funding and incentives for innovation, Canadian companies lag in technological advancements, reducing competitiveness on the global stage. Without significant reforms, Canada risks falling further behind in key industries such as AI, biotech, and clean energy. Immigration and economic policy. To offset its aging workforce and labor shortages, Canada has relied heavily on immigration. The country has welcomed both wealthy investors and lower-income workers to sustain its economy. While this strategy has short-term benefits, it has also led to rising housing prices and increased competition in the job market. Previously, Canada had safeguards in place to regulate temporary foreign labor when unemployment exceeded 6%, ensuring job opportunities for existing residents. However, in an effort to combat stagnation, these policies have been relaxed. While this keeps the economy moving, it also drives up housing costs and accelerates the brain drain. Moreover, infrastructure development has not kept pace with population growth. Public transit, healthcare services, and urban planning have struggled to accommodate the influx of newcomers, leading to congestion, longer wait times, and declining quality of life in major cities. Without better planning, the strain on social services could become unsustainable. Can Canada bounce back? Despite these challenges, there are solutions. Investing in infrastructure could address Canada's $200 billion deficit, creating jobs and attracting skilled labor. The country could also focus on automation, industry incentives, and technological innovation to compete with the US and retain talent. Recent efforts have been made, but much more aggressive action is needed. Additionally, tax reforms could incentivize businesses to reinvest in productivity-enhancing initiatives rather than speculative real estate ventures. Strengthening trade partnerships beyond the U.S. could also reduce economic dependency and open new avenues for growth. However, with soaring immigration, unsustainable housing debt, growing wealth disparities, and leadership uncertainty, Canada is running out of time. Its failure to act preemptively means the road to recovery will be even harder. In many ways, Canada today resembles Spain 2 decades ago, a cautionary tale of economic mismanagement. While no one can predict the future with certainty, history suggests that failing to address these issues now will only make them worse later.